I think agentic AI is going to make all the difference. I think companies that implement automation right now are going to be so far ahead than companies that are implementing this. So I think that just having this new technology that we didn't have in the last refi boom is going to allow lenders that are taking the proper steps to handle 2, 3, 5, 10 times the volume they were able to handle in the last refi boom.
I tend to agree. I think that those that will adopt agentic AI as part of their mix of how they work through refinancing, they're going to have a huge advantage, right? And I think the ones that don't are going to be left behind, and that's going to create a big divide. So I think a lot of the table is being set right now for that next cycle. And I think they're definitely, like, many of the customers we speak with and work with, they're more visionary, right? They're taking that leap and they're investing in this new technology, because for them, it's not just like they want to be a follower in this. They want to use this to have a competitive advantage against their peers, right? And then win the next cycle. Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as, how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Welcome back, everyone. I'm really excited for today's episode. I'm joined by our account executive at Multimodal, Matt, to talk about something urgent, the next refinance wave. If you missed the last one, you know what it cost. But this time, agentic AI gives you a chance to do it better. And I love that you, Matt, are here to discuss this with me today. You've been deep in the field, talking to lenders every day. So I think you'll have great insights to share with us. Good to have you.
Yeah, thanks so much, Ankur. I'm excited to be here. I think it's a super important topic and definitely a concern for lenders right now. Hopefully our conversation can help bring some clarity to, what's going to happen with the next refinance wave.
Exactly, that's the goal. Today we have agentic AI at our disposal, which can really take pressure off ops teams and help lenders stay ahead of the volume curve. So in this episode, we're definitely want to discuss how agentic AI can be helpful in a very practical, concrete manner. But before we get started, Matt, could you please share a little bit about yourself and what you do at Multimodal?
Yeah, for sure. So I'm an account executive here, kind of on the front lines of the sales team, but I started off my career actually as a loan officer at Quicken Loans, which is now Rocket Mortgage. From there, I actually pivoted into lending technology. So I was working for a small CRM company that was a CRM specific to mortgage lenders. And that was during the kind of 2020, 2021 refinance boom. So it was really good time to be in it. It was also a hard time to be in it because lenders were doing so well, but they didn't sometimes feel like they needed to market themselves through a CRM. But needless to say, our messaging was kind of along the lines of, right now things are really good and you have a lot of clients and you need a way to kind of stay in touch with those clients when things do die down, which as we see right now, things are a little bit slower. So I'm, really curious to hear kind of what stands out to you about, how lenders have responded to this slower time and, kind of where you see that going.
Yeah, I think mortgages are so cyclical. Refinancing is so cyclical, right? So I think there were crazy times, as you mentioned, where people weren't investing as much into improving operations. They were just drowning in volume. Now I think you see the opposite, which is the volumes were down. There might be a new wave coming in, just like with any cycle. But then how do you prepare yourselves for it, right? And I think what you mentioned earlier, like ops came under a lot of pressure with all the volume. How do you support them through software? I think agentic AI is really well suited because now a lot of more manual part of the work that ops teams were doing to go and handle refinancing volumes. This go around, the next cycle, when there is immense volume, a lot of that could be handled with agentic AI, whereas historically it required maybe doing some offshoring, maybe having some RPA that occasionally would work, right? But tech wasn't flexible, wasn't able to do quite enough as part of that the workflow. So yeah, I'm really curious, where were the big pressure points in the last cycle? Where did teams really get bogged down with too much work and not enough time to do so?
Yeah, I mean, I think you're 100% spot on with like the ops aspect of things. One of my best friends is still a loan officer. I started with him at Quicken Loans, and he's at a new lender now. But he was telling me that he thinks he missed out on like millions of dollars of personal income in the last refinance boom because his ops team was actually kind of hamstringing the loan officers to only allow a certain amount of refinances per month. And he estimates he could have been pumping out like, 20, 30, 50 refinances a month with, the network that he had at that point from years of being a loan officer. But I think his team was capped at 10, or he himself was capped at 10 loans per month for refinances. He could do more purchases, but yeah, he just estimates that he lost out on significant income from that. I think another aspect is also just, you'll see that underwriters were getting paid a lot more at that time as well. They were, in super high demand. And because of that, they could kind of increase the amount that they were charging lenders and, bouncing around to different lenders. And, good for them for, making more money during that time. But I think lenders are, not necessarily looking to bring on new underwriters, having to train them up, having to, train them on their processes and, what that looks like and paying them a lot more than they would during other times as well.
So to maybe get even more concrete, like what types of work were the ops teams trying to do? Where could this be assistive to them? Because when we think about agentic AI, like what does it really mean in this space, right? What are the types of work that get hard to do during kind of very heavy refinancing periods? I'm just curious, like from your perspective, what are the nature of the tasks that could be offloaded to software?
Yeah, so I mean, what we see typically is a few things. One being like the more basic underwriting decisions that, underwriters and processors are making. I think that there's obviously a lot of math that goes into, mortgages and, what type of rates you're looking at and, loan to value ratios and debt to income ratios and those types of calculations that loan officers, processors, underwriters are looking at every day. And I think that a lot of that can be automated, as we've seen with agentic AI. And I also think the document processing side of things as well. So, you see these income documents like pay stubs and bank statements that are pretty complex and traditionally haven't been able to be automated. But, now with this new technology, I think that's going to be huge for the next refinance boom because, lenders that are implementing automation right now are going to be light years ahead of than, lenders that aren't implementing this type of automation right now.
And how come that isn't happening through the workbenches that these teams are working out of, like different loan origination systems? As you think that they, already have software installed with the lenders could benefit from these agentic experiences. Why don't the workbenches, the LOSs, deliver on that agentic AI themselves? Why is there a need for a player like Multimodal to step in?
Yeah, I mean, I think that, lending in general, finance in general tends to be slow to adopt some of these types of technologies. And, because of that, some of these technology players haven't had to advance as quickly as, some other industries. I think we see like some of these large LOS lenders have, just transitioned from like SDK to API. I think because of that, they're still a little bit behind when it comes to, AI technology. I think some are trying to do it, but I think that multimodal is really unique in that because we're a vertical based solution, we're, really tackling all aspects of these financial workflows and not just focusing on, one singular aspect of this.
Yeah, I mean, I think that the last cycle, the boom there, I think left some, maybe some scar tissue, right? Which is like, we don't want to have to encounter these types of problems again. And I think it exposed like what the LOSs, like the loan origination systems, loan origination software was good at or not good at, and then where could you potentially introduce better productivity, better efficiency. So I think last time around, the lenders made short-term decisions to just survive, frankly, the influx in volumes. This was 2020, 2021. I know they hired a lot of people to do work. It was hard to hire enough people. They were bolting on tech that didn't really work and integrate. And so I think this time around, like now that we're in a little bit of a lull, right? A little bit of a trough in terms of volume, I think people are realizing the problems they encountered last time. They had an inconsistent data falling through their pipes. Some of the workflows were broken, right? Because they came under pressure. And so now they're taking a step back and saying, okay, well, if we're preparing for the next cycle, how can we be more efficient without having to hire as many more people? And then how do we also gain a competitive advantage against some of the other lenders by using software to speed up the time it takes to get to, basically getting the refinancing done? And that delivers a better customer experience and therefore helps the lender win longer term. I'm curious, like what are the things that you're noticing lead to like a FOMO sensation among lenders that are maybe more inclined to adopt agentic AI? Because one reasonable frame might be, why should they adopt agentic AI right now? Why not just wait until they're in the throes of like the volume increases from maybe rates coming down and the refinancing activity picking back up?
Yeah, that's a great question. I think that, AI technology isn't your typical SaaS product, right? It's completely reworking how you're structuring your business, how you're handling your business. And because of that, it's not like you can just turn on a button and it just works. Right. We have to train these agents in a way that, they're trained on your own data because obviously a lot of these banks and lenders are very sensitive of personally identifiable information. They're very sensitive of how they're handling their data. And, because of that, obviously here at Multimodal, we train all this data on that company's data in particular. And so I think that it takes time to, see value. It's not an insane amount of time, but it does take a little bit more time than just turning on a software. And secondarily, it takes more time for your employees to, learn this technology, work with this technology. And, something that you brought up was, hiring less people. But I think when this refi boom does happen, you are going to see, more loan officers being hired and more people jumping in to this industry. It happens every cycle, when rates are low and, everyone's refinancing, a bunch of new people jump into the mortgage industry. You have new loan officers that aren't quite as skilled. You have loan officers moving from company to company and learning new processes. And then, when rates slow, people leave the mortgage industry because it's tougher to make ends meet as a loan officer. So
What do you think will make the next refi cycle different than the last one?
I mean, I think agentic AI is going to make all the difference. I think companies that implement automation right now are going to be so far ahead than companies that are implementing this. So I think that just having this new technology that we didn't have in the last refi boom is going to allow lenders that are taking the proper steps to handle, you know, 2, 3, 5, 10 times the volume they were able to handle in the last refi boom.
Yeah, I mean, I tend to agree. I think that those that will adopt agentic AI as part of their mix of how they work through refinancing, they're going to have a huge advantage, right? And I think the ones that don't are going to be left behind, and that's going to create a big divide. So I think a lot of the table is being set right now for that next cycle. And I think they're definitely like many of the customers we speak with and work with, they're more visionary, right? They're taking that leap and they're investing in this new technology because for them it's not just like they want to be a follower in this. They want to use this to have a competitive advantage against their peers, right? And then win the next cycle. And so, I think when you think about agentic AI, these are agents that are taking action in ways that people would. They handle edge cases, or they escalate edge cases when they can't be handled, right? So they're able to handle a lot of the core workloads, and they go from end to end. So it really is a lot of automation, not just like doing document parsing, but going deeper into decision making and diligence side of things. And I think that will make work much more efficient. So with the same team, you could do 3, 4, 5 times as much work, as much volume as you did before. And so there isn't going to be this like bottleneck that you need to then hire people for, which is hard to do and expensive to do. And I think that is a huge advantage that agentic AI could get to deliver. But you can't in many ways wait for that cycle to turn, because it will kind of be too late, right? You're going to experience the volume increase. You're not going to be able to invest into change management with new technology. And so you're going to have to do it the old fashioned way. And that's going to put a lot of the companies that haven't adopted agentic by that point on the back foot.
Yeah. So I think that this is like a really tangible example is bringing agent flow into this. I'd love to kind of hear your take on agent flow. Where are different AI agents kind of stand among these refi workflows that we're talking about, so that we can, kind of give some visualization on, what that's going to look like with technology versus with, humans right now.
Yeah, it's a really good question. I think agent flow allows our customers to build out agentic AI on their workload. So to make that concrete for this space, AI is reading in the application that comes in, the refinancing that's required. Basically, they're supporting documentation as part of that, right? So end-to-end identity documents to the extent necessary. There's information on the existing mortgage that's outstanding. So all the documentation that needs to get read in. And the AI agents that are deployed on agent flow, they're reading in the documents, pulling information out, cross-checking against the associated documents that were submitted, calculating the critical ratios that need to be calculated in order to make a decision, and then flagging anything that is unusual or anomalous that a human operator should review. But it's at the very end making a recommendation. So here's what the decision should be. Here's what the rate should be. Here's why. Here's what was considered, and here's what remains to be reviewed by a human operator. And all of that is plugging directly into the CRM or the LOS, right? The workbench the customer uses, our lender uses to get work done. And so it's enabling the underwriting team to more quickly work through that in order to make a final decision and then deliver that experience to the end user, the individual that's looking to do the refinancing. Because I think the major thing is that it moves work along from start to finish. It's not just assisting people, it's actually performing some work that they normally would have had to do, and then only pulling them in at the very, very end after all the steps have been taking place.
Yeah, and I think something you brought up there that's really important is that aspect of like red flags or, points when a human should be looped in, right? Finances and especially with, lending and these types of decisions, they're high stakes. There's, a lot that goes into it. And, frankly, screwing this up is really not an option for these lenders. So, having things like our confidence score that, the AI agent is a certain amount confident in its decision, I think is really critical. And would love for you to, just expand on that a little bit and kind of why we've implemented these confidence score aspects and, certain stages when humans should be looped in.
Yeah, I mean, I think agentic AI in complex workflows and regulated spaces is very different than agentic AI on consumer applications or non-regulated verticals. I think when you look at agentic AI more broadly for non-regulated spaces or even consumer applications, you just want the AI agent to kind of do what it is that you want to do, like plan a travel itinerary from start to finish, right? It doesn't have to tell you what things it considered, what steps it took, why it took those steps. Like, you frankly don't care. In these workflows that we touch, you do need that visibility. You do need that, basically audit trail. What do the AI agents consider? What context do they use? What decisions do they make? Why did they make them? And that's going to be important for internal compliance and external regulators. So trust is built up through that audit trail and that process documentation, which is like we lay out exactly all the things that the agent should do and where the guardrail should be in order for the work to get done in the way that the lender needs it to get done, right? So that open-ended AI agent doesn't work well in regulated spaces. You need an AI agent that's highly capable, trained in the way that the company operates, and then you need like guardrails to make sure it stays within the lanes that you've defined more or less. Now, it can have a lot of latitude within those lanes, so it can make an underwriting decision or underwriting recommendation, but it needs to go through the motion that the lending team normally goes through, right? So it's not doing anything that is, out of norm, that is not according to policy. It's not hallucinating along the way. These things are really important. This alignment between the AI agent on the work that gets done in these regular spaces. And that's like what agent flow is all about. It's like creating that alignment and then delivering that back in an agentic form with confidence scores, with like proper things escalated to a human when the human needs to get pulled in. And so that handling of edge cases, escalated items, this is pretty critical. Otherwise, the AI agent will work with the standard operating procedures that the lender uses to go as far into that process as possible.
I think that we've talked a lot about, underwriting and decisioning. Something that, I really see, having been a loan officer, as a valuable piece of multimodal is, upskilling newer employees, right? As a new loan officer, there's just so many regulations that you need to know and so many different guidelines, those kinds of things. I'd love to hear kind of your take on where multimodal fits into all that, especially when it comes to like quickly searching for information that's going to give you the right answer.
Yeah, so I think the way we approach it is that for new employees that come online, first they should continue operating out of their existing workbenches. So you shouldn't change the look and feel of things that they're accustomed to. So if they're used to a particular CRM or an LOS, like they should be able to work out of it. But the other beautiful thing is that if you've taken all of the underwriting guidelines, the standard operating procedures, and you load them into something like Agent Flow, right? Agent Flow is taking all that context and then preparing an experience where the new employee can query against that knowledge base and then get really good, reasonable ways of taking the appropriate actions. And so it starts basically supporting the new employee during the onboarding phase. And it's doing a lot of the work that they normally would have had to do. And so if the new employee is uncertain, has questions, basically the AI agent, because it's been trained on a lot of data and prior to the employee joining, it's able to help assist the employee in that onboarding piece. That's one major advantage that we see from customers working with our platform.
Yeah, that's great. I think that there's, some vendors in the mortgage technology space that cover aspects of what we've talked about today. I'd love to hear more about, why you think Agent Flow in particular stands out among these other vendors, especially when it comes to like being a more encompassing solution.
Yes, I think a couple of things. One is I think a lot of vendors that are still in this space are building basically very narrow experiences, like these point solution experiences. And so they might do one thing well, but only that one thing in that one way. And what we typically find is that every single lender, even if they cover the same product, they have a different set of rules. They use a different set of criteria. They want their steps to be done in a slightly different manner. And so when it's too opinionated, when a vendor is too opinionated of a solution, so a very narrow point solution, it's not flexible enough to handle the complexity of the standard operating procedures that a lender has. And so our objective typically is to make sure that we have a platform first approach where a lot of things come pre-built, but you can allow the customer to supply their own data around how decisions should get made. And so it's very much like purpose built in the way that their teams are operating. So I think that's one huge advantage. The second bit is that we talked about this earlier around the trust that needs to get built up. So our software comes with a lot of trust-based features. So audit trails, confidence scores, process documentation, the things that are essential for change management to happen successfully. So if you don't have that, the problem is that you have AI that is kind of willy-nilly doing work and you have no idea whether it's compliant, it looks at the right things, it made the right decisions in the ways that your people would have normally. And so if you can't develop trust in the AI, you're not going to use it. Frankly, because you feel like it's going to make the wrong underwriting decisions, or it's going to run afoul of compliance, or you're going to get penalized by external regulators. And so that trust aspect is pretty big, has to get built up. And then the last thing is, I think a lot of vendors that we see in the space that our competition, they are building basically replacements for existing systems that the customers that we sell into are using already. And so like they're trying to replace the LOS or the CRM. And that becomes, cause a lot of friction, which is you have to rip and replace what you have to adopt something that is net new in the market. But typically, I think what we've seen is that lenders are less willing to change wholesale their workbenches. And so they want vendors like Multimodal to be able to seamlessly integrate, right? So having that API first platform that we have, I think is a huge advantage in making it possible for you to introduce novel agentic AI experiences while keeping the rest of your stack completely intact.
Yeah, and I mean, there's some really good mortgage technology companies out there, and frankly, like ripping and replacing your LOS system is like an absolute nightmare for everyone involved. Like no one wants to do it. So being able to integrate with a point of sale system or an LOS system is going to be huge for us and for our clients as well. I want to know, like, if you had to start somewhere with agentic AI as a lender, where would you start? I think that there's a lot of different aspects that we've talked about, different areas that automation can be implemented. And I think tackling it all at once is kind of overwhelming. So where would you start if you were a lender?
Yeah, so I think the broader workflow involves usually these components. You're handling what I would call the messy inbox problem, which is new applications, new requests come in, usually through web app or email. And then you have to parse information from documents that are supplied. So income and identity documents, existing loans that you have, perhaps, right? And so starting with just the document processing and the decision making to figure out the next best action. So what we call triage is where we love to start. So triaging the messy inbox. So you don't need people to open up the files and understand what file it is and understand the data in it, and then figure out, do you have the complete information you need to proceed or not? A lot of that could be done through the first type of AI agent, which is doing document AI and decision AI. That's where we like to start. It shows a lot of value very quickly. It takes one massively administrative part of the work off the plate of people. And then we quickly expand, which is, okay, well, once you've done the document AI decisioning piece up front, including drafting the correspondence to go back to the borrower, how do you help the underwriting team do diligence more quickly? And that's a different problem, right? At this point, you're looking at data that's been pulled out. You need to support checklists or rules. And in some cases, you have to have human judgment, right? And human judgment can be translated into model prediction. So the model taking the first stab at making, like flagging things for diligence and then deciding whether it's good or not good, like as per the lending protocols that the customer has. So we expand quickly, right? But we start with one leg that delivers a lot of value, immediately moving to diligence leg, and then even some of the report creation leg. But you don't want to start with all of it all at once. You want to go layer by layer and build a automation for the rest of the process that should go.
Yeah, and I think one thing you touched on a little bit there is that decisioning piece. I wanted to dive into that just a little bit. I think that, these documents, these income documents that lenders are dealing with on a daily basis and understand, extremely in depth, are not documents that the average American is looking at on a regular basis, right? So I, as a lender, might say, send me your, tax returns and your W-2 and your Schedule K, or, some of these schedules that, people just don't even understand.
Yeah.
And because of that, oftentimes lenders are getting incorrect documents sent to them. They're getting document sets that don't contain everything that they've asked for. And these underwriters, processors, loan officers are spending time looking at incomplete loan applications and then spending time emailing the client, letting them know, hey, you sent us your W-2, but you sent us the wrong pay stub. It was your pay stub from 6 weeks ago instead of from 2 weeks ago. So they're just dealing with these types of situations all the time. I'd love to hear how Multimodal is specifically addressing that problem.
Yeah, no, I think it's a great question. It's like, this is time like that humans shouldn't be spending reviewing this, right? So you're basically moving too slowly, what we call like moving at human speed, when you could just have this done at machine speed. So the idea here is that you have these documents that you need as a lender in order to proceed. You set that up front, right? So you define that, set that up front. And then when the borrower supplies that information via email or web portal, at machine speed, you can have the agentic AI read in those documents, understand the context, decide if this is the relevant document or not, and also decide whether it meets the minimum criteria you have as a lender to go and move forward. And it does that all instantly, essentially. So by the time the borrower has like finished uploading, all the documents have been parsed, all the information has been pulled out, the decisions have been made. And the goal here is to then provide the correspondence back to the borrower saying, we have everything, we're good to go, or we're missing XYZ. Now, because things are happening at human speed today, you have people reading in the documents, maybe days, maybe 2 weeks later, and then they realize something's missing. And then they go back to the borrower and say, hey, thanks for submitting this thing that you submitted 2 weeks ago, but you're missing X file. And that's super frustrating on all parties. The borrower is frustrated because like, why did you need 2 weeks to let them know they were missing a bank statement? And the loan officer is spending time reviewing stuff manually that, you'd think that AI could do. And so I think no one wants to be doing this work, right? It's delivering a poor experience both on employees and the customer side. And I think this is an opportunity for agentic AI to quickly fill the need and solve for that, right? It allows the borrower to get a better experience and allows the loan officers and the underwriters to spend more time like speaking with the borrower, explaining the process, spending more time on the edge cases that come through as part of the credit diligence instead of doing data entry. Like it really is just data entry, something that machines are much better suited to do. And that's what we're solving for at least in day one. And then, by day 200, we're moving on to the next leg of the process and solving for that. But we do need to start concretely in one area, and that happens to be like a triage of documents that come in. That's usually where we like to start and where we can add the most value, in the quickest manner possible.
Yeah. And I think that, agent flow and multimodal really being focused on financial services specifically and understanding these complex workflows is super critical when it comes to, these lenders selecting a vendor to tackle this problem. I guess I'm curious, what led you to focus on finance in particular? I know you have a bit of a background in finance, so just would love to learn why you selected, finance as the problem you wanted to tackle.
Yes, I love finance because I know the space really well. I know what types of work they're going through. The work that happens within finance is heavily regulated. It's mission critical. It touches people's financial lives. And so generally the way I look at it is that this is work that has to be done at such a high bar, right? And there is this a very highly compensated space, and there is in some ways a dearth of talent that could do this work well. And so when you think about building a durable business that can add a lot of value, this is a great space to be in. Because essentially what happens is that you can't develop a generalized AI agent to do work in this space. It's not going to work, right? In fact, a lot of companies that we sell into, they're scared of open-ended agentic AI. Like they don't want a kind of a rogue AI agent operating. It's going to run afoul of compliance. They're going to get fined by regulators. They're going to lose trust with customers as a headline risk, right? It's like all sorts of risk. Like it's like risk. And that's all agentic AI is. And so I think, the reason why we built Multimodal, why we're doing this in finance is really hard to solve for. There's huge impact in getting this wrong or building this improperly. And so we love that challenge of building something that is very robust, very high end, very reliable, can work in production, has the trust capabilities that need to be built in. And we know the space, so we're building the AI part to work in that space that we know already, and then to go back to the companies that we used to work for and then sell them the software, right? In the way that we think the software should be built to go and meet their needs, both from a not only technical functionality perspective, but from a compliance, trust, change management perspective. So I think that's the main reason we're building and operating in finance. We know the space, we know how mission critical it is, and we have that expertise to then go and build this right so it can serve the many, many, many workflows that live within finance, well beyond even refinancing.
Yeah. So like we said, interest rates, they dipped significantly in 2020 and 2021. They were like the lowest that they've ever been, right? And now we're seeing interest rates, at some of the highest rates that they've been in the past 20 years. So what would you say to, a lender who, sees these rate changes coming at some point? We don't know when it's going to happen, but will happen at some point. So what would you say to those lenders who are unsure what to do at this point, and how to implement AI or automation to prepare for that?
Yeah, I mean, I really do think it's like pre-internet, post-internet type of phenomenon. So it's not a choice. It's like you have to do this at some point. Now, I'll say the big two cases for agentic AI are, one is it's a efficiency play. So you could do more with fewer people, or you could do more with the same number of people, right? So the idea here is that it can help improve margins by requiring fewer people in the workflows. So that's one angle. I know people are acutely focused on that, particularly for going into a recession, right? It's like, how do you go and manage the personnel expense you have and software expense that you have? Can you introduce agentic AI to help with both of those? But the other bit, and I think the one that will actually be more durable over time, is that this is actually going to help with new revenue. So it's going to be a revenue enabler. It's going to help you win new business. It's a competitive tool to use. And so if you get quotes out in half the time in that it takes your peers to do so, you're going to have a much better chance of winning the best opportunities. And so from that perspective, this is a revenue enabler. And I think there's so much potential. I think that is probably the bigger impact longer term, even though most people are focused on cost reduction. And so, I think this is a really great time to go and take a look at your people, your existing software, and figure out, are there better ways to introduce agentic AI to make your people more productive and to potentially reduce some of your existing software expense, which hasn't adapted enough maybe into the world of AI. And I think the major piece here is that I think there's more risk of not trying and testing the software out versus the risk of testing and trying it out and like not getting what you need, right? So there is huge risk in like sitting on your hands, and I think that is a existential risk at some point, right? As I mentioned, it's a shift from pre-internet to post-internet. It's not something that's optional; it's a must-have. So the sooner you can get in and experiment and try, you'll be at a huge advantage versus your peers have built, right? Some which may cease to exist, frankly, if they don't adopt this well. So that's my major argument to customers that we speak with. Is like, this is not optional. All the enterprises are doing it. Mid market's doing it. It's really time to now figure out how to make this work for your organization.
Yeah, and I think that you talked about scaling kind of without that chaotic aspect of having to hire a bunch of new people, but you are going to have to hire new people, when rates do drop. Most lenders will, if they're, trying to increase their volume. And I think that if anything, having automation and being able to say to those people that you're looking to hire, like, we're not going to cap you at the number of refis that you're going to be able to do when rates do drop, that makes you more attractive as a lender to those loan officers. It makes you more attractive to the underwriters that you potentially are looking to hire, because their day isn't spent, just looking through documents for information. It's spent making strategic decisions. And, ultimately, it's just going to help you scale faster, smarter, and better overall. So
Completely agree, Matt. And I think that there's like a learning curve with all of this, right? So I think that I realize it's daunting, it's unfamiliar, it's it feels kind of new and scary in some ways. Like, it's both an opportunity and a challenge. So, but I do think that the sooner you kind of get over the hurdle of trying to embrace this, or at least learn about it before you embrace it, I think the better, right? And that's like, we're trying to do that through different strategy workshops we do. We do white glove implementations for customers. They kind of see the value. It allows them to see what this would look like if implemented properly. And then for the next like dozen workflows, they could do it on their own. We have good onboarding processes, good customer success templates that we built out. So we want to make this as easy as possible to adopt newer technology. And I think that that's kind of our mission, is to go and promote and help with adoption and the change management that's involved in agentic AI for finance.
great. Do you have any other questions for me here?
Well, I'm just curious, maybe to close off here, what's exciting that you're seeing right now among the lenders you speak with? What's the temperature in the room around how helpful or not helpful is, AI or AI agents to their business so far?
Yeah, great question. So I think that what's exciting to me is a couple things. Number one, this is happening all across different types of lenders, right? So there's credit unions, there's, retail, there's mortgage brokers, there's, wholesale lending and, even business lending, right? And they all have different challenges, but all their challenges are pretty similar in, basically just taking information out of documents, pushing it into different sources and making decisions based off that data, right? So I think that's been really exciting, is seeing even, some of these traditionally like less technologically advanced like banks and credit unions adopt this type of technology and be willing to have conversations around it. The second aspect is I think that these people that I'm talking with on a daily basis are using ChatGPT on a daily basis, right? And like you said, it's like a pre-internet, post-internet thing. I use it every day in my job. I'm sure, a lot of people listening to this podcast are listening or are using it every day. And it's completely changed the way that, I work. People are already seeing this have an impact on their careers and their jobs. And so they're more willing to have these conversations now than they might have been a year ago, even, because they're starting to adopt it themselves.
Yeah, it's interesting to see how the consumer experience is so powerful and so encouraging that people are choosing to bring these tools in. So, sometimes like not even in a kosher manner, which is like they kind of sneak it in to help them do work. But I think when you have really purpose-built experiences around agentic AI for enterprise, it's a game changer, right? And that's exactly what we're building at Multimodal. So I'm excited to chat more about like what you're hearing from the front lines of AI and finance. But for now, I want to thank everyone for listening to Pioneers. And if you ever want to see Agent Flow in action, head over to multimodal.dev or reach out to our team, including Matt here. Well, until next time, thanks for joining.